Hi everyone. This is a specific video for the premium examples on Boeing. And Boeing on the 24th of January 2020, it made a very explosive move late on a Friday afternoon. And I want to talk about that. I think a whole bunch of people in the premium room was discussing about this. And I did send out an alert. Let's take a look. The premium alerts, some sort of news at around 2:47, and I actually got in at around 2:37, and I didn't want to really alert it because it's a weekly play that I did, and in my premium alerts I don't really want to alert anything weekly because it's, you know, it's kind of like it's a personal or a trader's kind of discretionary decision to make that type of play. Now, if you're able to understand the cycles that I've been teaching in this room, you'll be able to kind of have a little bit more conviction into getting into that position and figuring out what your edge is. So in this video, what I'm going to do is I'm going to try to explain the edge in the Boeing trade. So I think I bought them at around 60 cents on the weeklies on the second bar here, and then I closed them off at around near the 21-day moving average at around $2.50, and I bought about 100 contracts. So let's go ahead and take a look. Right, so the first thing about A6 is if you join the premium room, and any membership, platinum, gold, whatever you want, you'll be able to gain access to the server that you see here. Okay, not only do you gain access there, you get to gain access to all the libraries and the rooms and the alerts and all that stuff. But when I want to focus our attention here is just the A6. So this this algorithm here has been back tested, and some of the probabilities are here just for discretion, and we need an edge. Basically, we're trying to treat the market as a cash machine, and we want to always kind of use our risk with some sort of advantage at hand. And one thing that we do have an advantage is anything over 57% is an edge, in my opinion. Okay, so basically in this A6, which is basically the TTM Squeeze, when it's scanning and triggers time cycle 1, there's a tendency to move in that direction after cycle 1 for less than 2.9 days. Okay, so here on this image here on the daily chart of Boeing, you can see back on this first cycle scanning position that's on the 21st. Okay, it was scanning with a 51% probability that it was going to move lower, especially when the underlying is trading under that yellow moving average, which is called the UTL. That's how I define it. Okay, now after less than 2.9 days, you should get an average move of about 1.3 to 0.5%. Okay, so I think it did move about 1.3, maybe 2% on the sell-off here. And then as the sell-off continued, you got the cycle 1 here that triggered. So that's that long bar right there, and then cycle 2 would have been that candle right there. Okay, so cycle 2, cycle 1 was this first green dot on the daily, and that was the low. Okay, and anything between cycle 1 and less than 2.9 days, you're gonna be generating a profit. Okay, so once you've got that profit, you just have to figure out how to manage your risk. And then obviously the 6-day moving average is your stop loss, depending on your position. So if you're extended above the 6-day or extended below the 6-day, if you're trading common shares, you would use that 6-day moving average as your kind of mental stop. However, for options it's a little bit different because of the urgency and the time decay. You kind of have to kind of manage that risk in tranches or whichever way you think is appropriate. Now, having said that, if we just move down to approximately below, not 0.5, but 0.6, you can see that time cycle 2, anything greater than time cycle 2, so that's about between this green dot, okay, and that green dot. What the backtesting is saying is that you've got a 60% chance that there might be a reversal, okay? And that's going to be like closing into cycle 2. So cycle 2 essentially happened on this day right here, which is the 23rd, okay? So on the 23rd, we had a 60% chance on cycle 2, 1 hour before the market closed, that there was a 60% chance that Boeing was going to reverse. And then on time cycle 3, which is essentially time cycle 4, 1 hour before the market closes, there's a 68% chance that this thing was going to reverse. And that increases your odds by another 8%, which is huge, okay? Because imagine if you had $1 million and you just made 8% in one day. That's a lot of money in one day. Okay, so 8% is a big edge. Now, having those statistics, you can kind of see that, it did exactly that, and some of the MACD indicators kind of curled as the price started to move up to that UTL on the daily. And that UTL on the daily is actually the 17-day moving average, which acted like resistance. And if we go and take a look at the moving Boeing on the 30-minute time frame, you can see that literally, what time was this? On the 24th at around 3 o'clock p.m., this thing just rocketed $4 from exactly 312 to 316 in a matter of 1 second. Okay, so then I alerted that, you can see in the Discord channel here. Premium alerts. You can see I alerted that at around 2:47. Okay, so that was right about there at 3:16. And then at 3:16, when you take a look at the intraday time frames, say like on the 5-minute or the 30-minute, you can see that you're going to see that there's the 6-day moving average, 8, and the 21. So that's set up for a BLT. Not only was Boeing extended below the UTL on the 30-minute and on the daily time frame, okay, you also had an A6 time cycle 2 to 3 going into 3 and 4 with a 68% probability. Not only did it have a 68% chance, greater than 60% chance, you had to pierce through the UTL, and you had some clear targets between 8 and 21. And that essentially got the contracts from 60 cents all the way up to $2 within like 10 minutes. Another thing you want to keep in mind here is that when Boeing was selling off on that cycle 1 and 2, we did get a MACD crossover here at around, what day is that? On the 22nd at around 2 o'clock p.m. Eastern Time. And then with that crossover, you can see that the fast and the slow MACD started to trend as the price gravitated toward the UTL. So that's a typical day trade where most traders would get in there and look for a mean reversion back to that unique moving average. And keep in mind, this unique moving average is a back-tested moving average specific for Boeing. Okay, this moving average is going to be always different for different tickers. But as you can see, once you get this big gap between the price and the UTL, we call that extended, and it was extended on cycle 1 and 2. So as it got extended, we didn't short it. We were shorting something else. But there was a time right here on cycle 3 into 4 on the daily time frame that we got a big spike here. You also want to, didn't really notice this, but if you take a look on the daily time frame, the 30-minute time frame, and let's increase the TTM squeeze here, those red dots. You can see that red dot right here. Okay, and then just being consistent with the cycles. Okay, back here on the back testing stuff. Okay, you get cycle 1, 2, and 3. You shouldn't hold a short position more than 3 cycles. Okay, days is just a unit of A6, but if we change that unit to the 30-minute time frame, the cycling pattern is still the same. So you got 1 green dot, which is 1 cycle, which is equal to 30 minutes. 2 green dots, which is 2 cycles, which is 60 minutes. And then you get 3 green dots, which is 90 minutes, 3 cycles. And you get that 4th one, which is a 68% reversal right out of that, going straight through and pierced. All right, so that's I think if you take a look at all these, this is a great example, perfect example. It's just sometimes in the room there's just way too many tickers, but if we just focus on these like cycles and what things that are scanning, and then after the fact, there's always going to be these opportunities where you kind of have that edge just a little bit in your favor. Fortunately, the news that came out was positive, and because it was positive, and on top of that we had this nice MACD trend that pulled back right to the 0 line and then ripped up higher on the 4th cycle on the 30-minute time frame, in conjunction with a cycle 2 and 3 and 4 on the daily. This couldn't be any more perfect of an example of how A6 and cycles work on a cycle 3 and 4. I hope that makes sense. Thank you very much and have a great night.